Good morning, everybody. It is January the 29th, 2015. Time to kick off another trading day. We've been doing pretty well this week, and I don't anticipate any different. The warmer than normal weather, like 30 degrees, to the tune of 30 degrees, is leaving us. It's headed towards the southeast. Probably won't make it to the northeast, where the weather's supposed to be cold here for the next 10 days or so. It is winter. It is almost February. No reason not to expect anything any different. Okay, the late rally in the financials came from the Fed statement yesterday, where they dropped the phrase considerable time on interest rates. Said they would be patient in raising interest rates. They did not say interest rates are going to remain low for a considerable time. So most people right now are saying the market is vulnerable to an interest rate increase starting sometime in June or thereafter. I really, how are they going to do it? This oil price collapse, that's where all the jobs have come from since 2009. If you took the job gains in the state of Texas, there would be a net loss in jobs for the entire United States. And we can see right now Kern County, California, is in trouble because their oil revenues, their tax money from oil revenues is going down. It's going to be everywhere. And it's going to have ramifications. So my guess is that the Fed's going to find it very difficult to raise interest rates. Now, the only scenario that I've heard that makes sense about why the Fed would raise interest rates is that Japan, now the ECB, are doing QE programs, and when they have had they've reached the law of diminishing returns, so they're no longer having impact. If the Fed raises interest rates, then the Fed can come back and cut interest rates. So that's one bit of gaming or strategizing that could make some sense, but from a gamesmanship standpoint. But I just think they're going to have a very difficult time raising interest rates. So with no news out overnight to speak of, the stock markets around the globe followed the sell-off in ours. The only stock market that was up was the French stock market last night. I think today's market will be determined by the direction of the E-mini, and it's trying to rally right now. So the E-mini is probably going to trade up and look for resistance. I think what's interesting in the E-mini is that there really are no or very few resting buy orders once you get past the 50-lot trader in the stock market right now. So there's been kind of opposed to resting buy the dip type mentality or sentiment right now. It's kind of what happens. Let's see if somebody comes in and buys it, see if the Fed can stop the selling. So when we look at the structure right here, we've got this 3006 area, the breakout from 3006. We have the breakout from 130 even, so we've got pretty good support down here, 130 even to 130.06. We know there's stops beneath 130.06. We know that we have a B. So my guess is they're going to try to take it a little lower. So we're going to put our first buy at 1 to 5. Definitely like it better closer to 130 than at 5. And we'll put our second buy at 25 to 29. If the E-mini rallies today, we do not want to be long the financials. On the sell side, resistance starts in this 13 area. We're at 10 right now, obviously 16 to a high of 20. So this 11 to 15 is the first sell band. Closer to 16 the better. 19 to 23 will be the second. And again, it gets down to the direction of the E-mini. I think there's one short in the E-mini this morning to test support, but if they don't break it and take out yesterday's lows, then short covering will become the feature. And we know that short covering rallies in the E-mini can go 30 to 40 points. They're expected to go 30 points. And sometimes they can go as many as 70. I don't think the conditions are right to go 70 today, but in the E-mini, you never know. It is one wild contract when it comes to short covering. Okay, the knob spreads come in a little bit overnight. As you'd anticipate, the buying yesterday from a hedging standpoint was done in the 10-year, not so much in the 30-year. There was some liquidation there. So we've got resistance here in this 5108 12 area. We're at 29 for sure, and then we have basically against 20, and then we have the start of the selling that started in the 5 area. So 3 to 7, sell 1. We've had no trouble making our number 2 zones, buy or sell in the 30-year. The breakout, we're at it right now, basically 151. So we've rejected prices down below, so we'll make 21.25, buy 1. And 13 to 17, buy 2. And again, like I said, we don't have any trouble getting to our number 2 points on this contract. Okay, gold sold overnight. The hawkish stance by the Fed would be bearish for gold. Again, the fear going around the globe as to what comes next in the Ukraine, what comes next in the Middle East. Things are escalating in the Middle East. ISIS, they do not screw around. Anybody they catch, they're going to kill people. And makes you wonder how they think they can conquer anybody. But what they really hope for is that terror makes people so afraid they won't stand up and fight them. And we're finding if you do stand up and fight them, because of the logistics tail and everything else that is involved in waging a successful conquering campaign, taking land away from the other people, that they're a little lacking in that. Okay, looking at this structure on the F1, this 1240 area, 1245 is a pretty clean break, 1253, and then our 1267, 68, which is where we were before. So right now we're rejecting prices below 67. So our first buy 65, 67, buy 1. And then we've got our 60 area, buy 2. Again, I don't think the buying, the need, the fear, all that leaves the market. 75, 77, sell 1. And then 80, 82, sell 2. Unless you have gold fever, people don't buy gold just for its look outside of jewelry. So this fear, this sentiment, this trying to protect yourself won't be in the market quickly. And every time we have something about the Ukraine or the Middle East or China rattling its swords in Southeast Asia, or printing of money in the European Union, devaluation of currencies in the European Union, it supports the demand for gold. Okay, the year's holding in actually pretty well. The 1250 area down here, 50 to 60, buy 1. That's where support is. Then we like the 12 area, 1210 for buy 2. It's a ways away. Don't know if we have a shot because of the lack of news. 25 to 35, sell 1. 50 to 60 for sell 2. Not a lot going on today, but again, the long-term direction of the E-mini is lower. Okay, crude held in pretty well overnight too. The build in the United States continues. I think everybody knows that there's more production, more supply than demand. But this 40 to 50 area is where the majors, that's their economic hurdle. If the reservoir or the projected reservoir will produce at 40 to 50 bucks a barrel, they'll do it. That pretty much precludes drilling in tight shales. So what we've done, worst case scenario on this tight shale drilling, is that we've proved up reserves, albeit at 75 to 100 bucks a barrel. And that's not bad strategically, and you can produce it pretty quickly over a couple of years. So 45, 45 and a quarter, sell 1. 45, 50, 75, sell 2. 44, 44 and a quarter, it's where we are. There's support, just like it was last night. Then 43.50, 43.75 for buy 2. Don't think that there's a lot going on, but when this market starts to move, the pile-on characteristics of this contract can take it much farther than anybody thinks it can go, and that's why you can't trade this contract without protective stops. Okay, all eyes will be on the E-mini, in my opinion, today, but with a short covering rally or not. And we won't know till we start out. So I think there's one short left, and then they got to bust yesterday's lows to hold those shorts in the market. So structurally, you can see this 5 to 6 area right here, and then our 15 to 17 area. So 2005, 2015 is where we would expect to see sellers. And getting stops above the overnight session high is how I think the day will start. So looking at this screen, 5 plus or minus, sell 1. 10 plus or minus, sell 2, picking up this area here, picking up that area. That's going to be basically our sell 1 band, and then our 15 to 20 would be the second sell band. On the buy side, we're at 97.75. We've got this 91.90 area, so 90.92 buy 1, and then our 85.87 for buy 2. And we'll see what happens. Jobless claims, 300,000. I don't think anybody's paying a lot of attention to that because of its uniform sameness. Pretty much every time it comes out. 300 to 315K. So get short once, see if they can crack it, break the 90 area. If they can't, we can trade from the long side in anticipation of short covering. It'll take about 20 minutes to get everything going. I'm going to get busy on that right now. I'll be back with you as soon as possible.